Greetings. My name is Corey. I'm one of the product specialists here at Pattern. I appreciate your interest in working with us for your disability insurance needs. And today, what I'm going to be walking you through is a quote presentation to help you make sense of some of these fine details and what's really important to know about a disability insurance policy before you pick out which company would work the best for you. Now, as I work through this, the quotes that you have that are fine tailored to yourself specifically might look a little bit different than what I'm going to show you today, but the purpose of this is just so you know some key terms and how your policy works, and we're going to get started with that right now. When you open up your quote report, first you're going to see the available companies that has given us quotes that you can pick from. Those are going to be at the top of the table like this. And as you can see, this person has 5 different insurance companies that they can choose from. And at the end of any meeting that we do, and the purpose of this quote report is to look at certain details and then ultimately a company that makes the most sense for you as an individual. Next, we're going to look at how much benefit the certain insurance companies have quoted you with. Now, how the insurance companies calculate this is they will take your income and then they'll offer you a policy that is semi-close to matching what would normally be on your paycheck month by month after taxes get taken out. Since this is insurance on your income is of most importance. To get a policy, you will submit income documentation, and the insurance company will make you an offer that seems fit to fit what you need on a month-by-month basis. But let's say that you get a raise. Well, you will be able to increase this policy in the future because you'll have increase options. And how this works is all you need to do is prove to the insurance company that your income has changed. So that's submitting a most recent pay stub, a W-2, maybe a copy of an employment contract, and the insurance company will then review the numbers and make you another offer as to how much additional benefit you're eligible for. The elimination period is simply the amount of days that you need to be disabled before those long-term disability benefits start to kick in. And it's because after that period of time is when your disability is considered long-term. And those benefits can last you, with this client, they can last them until the age of 65. But judging on different health conditions, this number can be changed, but age 65 is industry standard, and that is always our goal. These policies will have contract language on there that says that they are non-cancelable and guaranteed renewable. Now, those are 2 terms that only benefit you. That means that the insurance company cannot make any changes to your policy once you already have it signed, and they can't cancel your plan as long as you keep paying the premiums. Since this is a policy that belongs to you, you get to make any changes to it, and you can cancel it at any time. The insurance company just can't be the ones to initiate those changes. These 3 lines are the writers on the quotes. And the reason why we quote with these 3 writers is because what we want is for everyone we speak to have a policy that fits everything they need. But also, I don't want you paying for a really expensive policy that is filled with features like this that you're not going to get a lot of use out of. So what we have found is that these 3 on a policy is going to give you the most return on investment and ultimately make the most sense. Now, making the most sense might differ from person to person. So some of you may have all these, some of you may want to opt out of one or multiple of these riders, but let me explain each one. Residual disability threshold is a rider that is aimed at protecting you in the event of a partial disability. So the way the policy would work without this rider is the only time that you would get paid is if you were losing 75% or more of your salary. But what about the in-between times? What if you just had to work part-time, so you're not losing all of your income, but you're losing a significant portion to make a difference? Having this rider allows you to get a portion of your benefit amount so you can make ends meet month by month, even if you're not completely disabled. Catastrophic benefit, on the other hand, is for the more serious injuries. So if you were irrevocably disabled, or if something happened where you needed assistance just to live your day-to-day life, having this rider is going to pay you several thousand additional dollars monthly on top of your policy's benefit amount that you would already expect to get paid. And the reason for those added benefits is just so you can make ends meet and pay for anything extra that you are responsible for, such as hospital bills. And the third rider, cost of living adjustment. This is to make sure that those disability benefits that you get paid by the insurance company will keep up with the ever-changing rates of inflation. These companies could also offer you a few months of limited mental health coverage. You can tap into this if you needed to miss work for specific mental health reasons, such as stress, anxiety, or depression. And finally, Comdex Score is a ranking system that is going to score these companies based upon their overall financial strength or stability as a business. So after you review all of the fine details on your quotes, the next step is to figure out how much does this cost. And that is found at premium amount and price per 100. For everything that is on your policy, premium amount is going to be the total monthly cost for that one individual policy. But the line to really focus on is price per $100, because this is kind of like a price per pound. It makes it very simple to compare these apples to apples if you're looking at quotes with some varying amounts of benefit at the top. So how it works, for example, what Guardian is saying with this client is they would have to pay $4.94 for every $100 of total benefit that they have on their plan. So the lower the better. The lower the price per 100, the lower your overall costs are going to be. So with this client, they might want to go with a company like Emeritus or a Standard right here in the middle. Since they have lower price per 100s, they're going to save more money by working with those companies. Quick disclaimer, price isn't always everything. A cheaper option for you may not be the actual overall best option. So if you have individual questions about yourself and what would be a good fit, please feel free to give us a phone call or send us an email. We'd be more than happy to help you. Happy to be working with you and hope you have a great rest of your day.